Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, December 13th, 2010. This morning we're talking about China holds steady. Heading into the weekend, there was a lot of speculation that China was going to go ahead and raise interest rates as they've been seeing some recent inflation there. Now, inflation data came in showing 5.1%. So this is obviously detrimental to the Chinese economy, so folks were expecting that they were going to go ahead and raise rates. Well, they actually didn't raise rates. They merely increased the reserve requirements that banks need to have, which means that they can lend less money out, which is intended to sort of slow down some of this speculative growth. But the problem is that they're not really tackling the problem, and the problem, it's not reserve requirements for banks, but it's the fact that they're not moving on interest rates because they don't want to move on their currency peg, and this is potential powder keg situation going on here, because something's going to have to give, regardless of what their government policies are. They just can't fight the rules of economics. So we're going to have to see what happens with this going forward. But as you can see, we've got risk taking going on this morning. All right, here's Aussie versus USD, just approaching 99.5 here, which means we're just away from parity. Let's take a look here. We're about 50 pips away from parity, which is up a little bit higher there. I just want to show you the euro as well. Euro's higher. You can see that it's had a nice run today. Part of it is that the Irish banking crisis is seemingly been settled, but we're going to have to see what happens with this going forward, because while Ireland has approved the austerity measures they're going to take, we're going to have to see if the market doesn't turn towards Portugal and Spain and perhaps force some action there as well. So that's kind of what we're seeing here. The other news we've got is the news of the tax deal from last week between President Obama and congressional Republicans. Well, this week, over the weekend, you're starting to hear a little bit of the political backlash over this, and the market's still trying to figure out whether or not the potential effects of the extension of the tax extension is going to counteract the effects of Bernanke's QE2, and you can see that the bond vigilantes came out in force last week, sort of as a little protest there to what's going to happen with budget deficits in the short term. But you have to remember that while we do have a huge budget deficit problem, all right, a lot of people say it's a revenue problem. We don't get enough in taxes, and others say it's a spending problem. Government just spends too much. Well, the truth of the matter is that it's a combination of the two, all right, and how we go about fixing this. It's going to take time, regardless of which path we take. But the difference is that this extension of the tax breaks. All right, this is an immediate stimulus to the economy. Is now should be more money in people's pockets, and they can decide how they want to deploy their cash. So that's kind of what we're looking at, and the reason why politicians don't like it, particularly on the left, is because they don't get to decide how money gets deployed. Okay, that's actually done by individuals. But you can see here, euro's higher. I just want to show you the pound real quick. Looks like pound flipped around. Wow, nice move. Okay, pound was lower earlier today. They had producer price input index numbers come out this morning, which are a little bit higher than expected. Now, they're going to be reporting their CPI data tomorrow, and should CPI remain outside of that target band, then they may need to do something with interest rates over there, or at least their quantitative easing program. Now, we're going to see the minutes from the Bank of England's rate policy meeting. It's going to come out next week, and we're going to see if anybody's sort of flipped their stance over there. So that's what we're looking at today. Risk-taking day, to kind of counteracted the risk aversion we saw last week. Okay, I apologize for no videos last week. As you may be able to tell from my voice, I was actually sick all of last week, and I had problems speaking, to be honest. So I apologize for that, but we've got videos all week here for you, as well as the webinar that we're going to be doing on Wednesday. How to trade Forex like a pro trader. That's going to be at 11 a.m. Eastern Standard Time, and if you sign up for that webinar, we're going to show you how you can get our introductory currency trading course for free. So that's what we're looking at today, folks. Looks like some risk taking happening, and we'll have to see what happens with these tax extension of the tax cuts, and then also we've got the Fed FOMC meeting tomorrow afternoon, where I wonder if they're going to address this as well. So that's what we're doing today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.